The most valuable book any trader will ever write isn't found on a shelf. It's the one you build yourself, trade by trade, mistake by mistake, lesson by lesson. Every entry, every emotion, every decision, they all tell your story. Because in the end, trading isn't just about charts or strategies. It's about you. How you think, how you react, and how you learn from the process. Welcome back to the Trading Psychology course here on the ComLucro channel. In this chapter, we're diving into one of the most powerful tools for self-improvement in trading, your journal. It's not just about writing numbers or recording trades. It's about creating a real-time feedback loop between your actions, your emotions, and your results. You'll learn how to transform your trading journal from a boring logbook into a personal performance system, one that helps you identify emotional triggers, recurring mistakes, and patterns that either make or break your consistency. We'll also explore how top traders and coaches like Brett Steenbarger use journaling as a form of psychological training, a structured way to turn experience into wisdom and mistakes into growth. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. Now, let's start by talking about something most traders overlook: reflection. Many spend countless hours studying charts, strategies, and indicators, but only a few take the time to study themselves. The truth is, your trading performance doesn't just come from technical skill. It comes from understanding your own behavior, your reactions, and the emotions that influence every decision you make. A journal bridges that gap. It turns trading from a series of random outcomes into a process of continuous learning. When you write down what you saw, what you felt, and why you acted, you begin to notice the patterns that cause your results to repeat. Suddenly, your mistakes stop being mysterious. They become data. Think about it this way. Every trade carries two kinds of information. One is market feedback, price action, structure, entries, exits. The other is mental feedback, fear, confidence, hesitation, frustration. Most traders only track the first, but the second one is what truly defines consistency. Mark Douglas often said that trading is a mirror that reflects your beliefs. The journal is how you polish that mirror. Without it, you stay blind to the hidden forces driving your decisions. With it, you finally start to see yourself with clarity, and that's where real growth begins. Now, let's talk about how to actually build a trading journal that works. One that feels useful, not like homework. A lot of traders make journaling harder than it needs to be. They open a huge spreadsheet, fill it with numbers, and after a few days, they quit. And I get it. If your journal feels like a chore, you won't keep it up. The real goal is not to collect endless data. The goal is to create awareness. Your journal should tell the story of each trade. Not just what you did, but what was happening inside you when you did it. Think of it as a short conversation with yourself. After every trade, you can keep it very simple. For each trade, write 4 things. First, what you planned, your setup, your reason for entering. Second, what actually happened, how the trade played out. Third, how you felt during the trade, maybe anxious, confident, impatient, or calm. And fourth, what you learned. What would you do differently next time? That's all you need to start. You can do it on paper, in a notebook, in Notion, or even a Google Sheet. The format doesn't matter. What matters is honesty. This isn't about looking smart. It's about seeing the truth. As you keep doing it, you'll start to notice patterns. Maybe you always overtrade after a big win. Or maybe you close early when you're scared to lose profits. These patterns are invisible on your chart, but they become crystal clear in your journal. And once you see them, you can start to change them. Because awareness is the first step to discipline. Great traders train their minds to think in 2 ways: fast and deep. This dual awareness is what allows them to recognize patterns and evolve through reflection. That's exactly what journaling helps you build. The mental focus to see patterns in real time and the depth of reflection to understand what drives them. Awareness, when practiced deliberately, becomes a true trading skill. Now that you understand how to journal, let's talk about the real magic behind it, the feedback loop. A feedback loop is simple to understand, but incredibly powerful. It's the process of acting, observing the result, learning from it, and adjusting your behavior for the next round. It's how athletes improve. It's how musicians master their craft. And it's exactly how professional traders evolve. When you make a trade, that's your action. When you review your journal afterward, that's observation. Then comes the lesson. What worked? What didn't? What emotions got in the way? Finally, you apply those lessons to your next trade. That's the adjustment. And that full cycle, repeated over and over, is what turns experience into skill. The key is to review your journal regularly, not just once in a while. Set a time, maybe every weekend, to sit down and go through your trades. Look for patterns, both good and bad. Ask yourself, what am I doing consistently well? And where am I still reacting emotionally? This process turns every mistake into information and every frustration into progress. Instead of being angry about a losing week, you start to see it as data, as part of your evolution. That shift in mindset is what separates the emotional trader from the professional one. As trading psychologist David Paul often says, discipline isn't something you're born with, it's something you build. In this clip, he explains how consistent repetition and structured routines help traders transform awareness into habit and habit into mastery.
I think that you can build discipline in any field that you want to sort of work at. It takes repetition, I go to the gym every day. I have absolutely no idea why I go to the gym every day at 61, but nevertheless, it doesn't take any discipline for me to go to the gym every single day. And the great paradox, of course, is that when you've got discipline, you don't need it. So it just happens. You can build discipline relatively easily. And in some of the training courses I've done over the years, we have a discipline building exercise, which is all about gritting your teeth and following a trading system for about 30 trades. It takes about 30 trades to instill that discipline. And I'm reasonably disciplined in most things. There are certainly things that I need to work on, that's for sure. But I firmly believe that anybody can develop the discipline to be a consistently winning trader, but very few do.
And that's the essence of the feedback loop. Repetition with awareness. When you apply reflection consistently, discipline becomes automatic. You stop forcing control and start living it. Now let's make this real with an example. Imagine a trader named Daniel. He's been trading for 2 years, and his biggest struggle is revenge trading. Every time he takes a loss, he feels the need to make it back immediately. Sometimes he wins, but most of the time, he ends up making things worse. At first, Daniel didn't understand why this kept happening. He thought it was just bad luck or bad timing. But when he started journaling, he noticed a clear pattern. After every loss, he felt a rush of frustration and pressure to prove himself. His notes showed that these emotional trades were always impulsive, taken too fast, with poor setups, and no plan. By writing it down, Daniel turned something emotional into something visible. It wasn't just a bad day anymore. It was a behavioral loop. He could see it on paper. That's the power of journaling. So Daniel made one small rule. After any losing trade, he would step away for 10 minutes before taking another. He kept tracking this rule in his journal. Over time, his emotional losses dropped sharply and his win rate improved. Not because his strategy changed, but because he changed. This is how journaling transforms your performance. It gives you the evidence you need to break emotional habits. It turns self-criticism into self-awareness, and that awareness becomes control. Every professional trader you admire, whether it's Brett Steenbarger's students, Mark Douglas's followers, or Larry Williams himself, has a method of feedback. Some write, some record voice notes, some review charts, but they all do the same thing. They learn from themselves. So, if you ever feel stuck, inconsistent, or emotional in your trading, the answer isn't always a new indicator or strategy. Sometimes, it's as simple as listening to your own patterns. And your journal is the microphone. All right, now let's put everything into action. This week, your task is to build your own trading journal and start using it as a real feedback tool. You don't need anything fancy. You can use a notebook, a spreadsheet, or even a Notion page, whatever feels easy and natural for you. What matters is that you actually use it after each trade while the emotions are still fresh. Here's a simple structure you can follow. Start with what you planned. Write down the setup you were trading and why you decided to take that trade. Then, note what actually happened, how the trade played out compared to what you expected. Next, describe how you felt before, during, and after the trade. Were you calm, anxious, confident, or frustrated? And finally, write down what you learned. What would you do differently next time? Once you've done this for several trades, take a moment at the end of the week to review everything. Don't just look at profits and losses. Look for patterns. Ask yourself, when do I tend to break my rules? Or what kind of setups make me feel most confident? The goal here isn't to judge yourself. It's to understand yourself. When you see your behavior written down, it's easier to connect the dots and make small, meaningful improvements. And here's the key. Pick one small change to focus on next week. Maybe it's taking a 5-minute break after a losing trade. Maybe it's checking your emotional state before each entry. Keep it simple, but stick to it. This process doesn't take long, maybe 5 minutes per trade, but the impact builds over time. You'll start noticing that your decisions feel calmer, your reactions slower, and your awareness sharper. And that's how consistency is built. One reflection, one lesson, one journal entry at a time. As we finish this chapter, remember, journaling isn't just about writing things down. It's about awareness. Your journal becomes a mirror that shows you what the charts can't, your emotions, your habits, and your growth. Each entry makes you a little more conscious, a little more disciplined, and a little more consistent. Over time, those small reflections compound, just like profits do. So make journaling part of your routine. Treat it as your daily conversation with yourself as a trader, because awareness creates discipline, and discipline builds consistency. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the ComLucro trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts. It's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.